What's good, YouTube? It's your boy Be Easy, and man, listen, yeah, I just find it funny, guys. I mean, I always laugh in my videos because it's so funny to me that the manipulation is clear to see as day, and they literally think they're talking to third graders or something because they're trying to tell us, no, 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 you didn't see that, you didn't see that. But anyways, double agents. What does it mean, guys? So first, let's take a look at this. What is the stock market, you ask, right? A stock market is a network of exchanges of sorts, and companies list shares on an exchange. Investors then purchase shares and buy and sell them among one another. Many of the investors are major funds controlling lots of money, but individuals can buy and sell through a broker. So, who participates in the stock market? Market participants include individual retail investors, institutional investors, for example, pension funds, insurance companies, mutual funds, index funds, exchange traded funds, hedge funds, big one there, investor groups, banks, and various other financial institutions. And also publicly traded corporations trading in their own shares. I find that odd they list that last. But anyways, let's continue on here. All right, so boom. We got the players, right? Let's talk about the Fed. The Fed. Let's talk about the Fed. The Fed provides stability to the financial system, conducts U.S. monetary policy, supervises and regulates financial institutions and activities, and promotes consumer protection. Okay, some of the fines out here, guys, if you've seen them. I don't know, man. $72,000 fine for a $3 million deal you made just doesn't seem right. In my opinion, guys, I think the fine should be at least 150% of the profit. So if you make $3 million on the deal, you should be fined $4.5 million to discourage people from continually doing illegal activities. It's that simple, guys. If I'm making way more in the deal, then I have to pay in fines and fees of these illegal practices that I'm practicing here. What is going to discourage me from next time doing the same thing? I'm baffled on that one, guys. But again, double agents, the SEC. Are you guys really wanting retail to stay around? I don't know. It doesn't seem like it because at this rate, guys, once AMC blows, they're not going to have retail left. And that's what my last video was talking about. The scavenger nature, the scavenger, brand that they're going to be bringing to the market. I mean, who's going to be left to pick the bones? Dudes, you guys are doing this, going about this all wrong. So anyways, back to the double agents, guys. So I bring up the players, I bring up the stock market and what it is to show you guys that it's supposed to be a place where we can come to invest in. The people usually create the demand, or the people usually determine which companies are going to be ones that survive and flourish moving forward, or determine which companies are not, for that matter. So I just find it odd that once you get to a point where you're shorting over 140% of the company in order to try to keep driving it down and creating synthetic naked shares to continually try to protect your own investment instead of being the market, letting the market be what it is. And that is where a place where people come to decide whether or not companies will flourish and surge in the future, guys. I mean, what the heck is going on here? Once you get to 100%, bro, you lost. There's no other 40%. That's it. You lost. Game over. You didn't bankrupt the company. You have to pay your taxes now, and that's it. I'm sick of this. I'm sick of this stuff. But I digress. So moving on, we got the Fed. So that brings an important part because the Fed has a very important part in this market, guys. The Fed provides stability to the financial system, conducts U.S. monetary policy, supervises and regulates financial institutions, supervises and regulates financial institutions and activities. Is that so? Promotes consumer protection. I don't know, man. That's why I say the double agents theory. I mean, could it be a case where the Fed is, kind of looking out for its own good and basically collecting a bunch of interest and, fees incurred and collecting as much as they can to build up their brand from these hedge funds and other entities that are short selling and using illegal activities, short ladder attacks, colluding behind the scenes, guys. Super hedge funds. Think about it. Hedge fund combined with other hedge fund to make super hedge fund after you have like 5-6 hedge funds going in as one. And they're fighting each other as well. I mean, this is like the movie Tenet, guys. There's multiple wars being fought out on a single front, which is the stock market, right? Multiple wars, guys. We're all fighting against time. The theta, time decay. We're also fighting against each other. You got the long investor, and then you got the short investor. Then you have fighting against each other on another nature, which is infiltration, guys. You have people all in the comments section very concerned about what people are doing over here. Now, I keep telling you guys, if I'm making billions over here, I'm not worried about what you're doing over here. I'm telling you, I don't care. But they're very concerned about what we're doing. They're paying off shills to go in the comments and spread FUD. You have evidence of that shown. You know, this is just a crazy war, guys. And again, time is the factor because I told you guys before, I filled out my beneficiary on my brokerage. Very simple to do on Webull. You just go to your account settings and boom, it's right there. So guys, with that said, that's the conviction that I have, guys. I mean, they can kick this can down the road for the next 20 years. I'll be right here continuing to add to my position, continuing to buy the dip. Right here, guys. I'm not going anywhere. And even when the squeeze does occur, you know what? AMC is a great company. I like the CEO. I like the stock. So with that said, moving forward, guys, to the double agents theory. So, excuse me for going all over the place here, but there's a lot to cover, guys. A lot to cover. So with the double agents theory, the SEC seems to me as a singular agent, maybe perhaps. I don't want to call him a double agent because Mr. Gary Gensler, who was hired, who was not part of any long-standing firm or didn't have any doings with it or workings with the past constituents or the past construct of the market, which was very corrupt, still is. There's little trust. There's very little trust from the common consumer to the actual market makers and the SEC of those things of that nature, guys. You have to build trust with us. And as we've seen it, I've literally seen you guys find someone $72,000 for a $3 million occurrence here. I mean, this is not cool, guys. I mean, I don't know what you want me to say to that, but that doesn't breed trust. That shows me you're a double agent. Another double agent, right? Who we got? We got the Fed, man. The Fed could be a possible double agent, guys. If you think about it, their job is to protect consumer, what does it say? Consumer protection. Promote consumer protection. Regulate financial institutions. I don't know what you mean by regulate financial institutions, guys. They should be jailed, some of these people, for the illegal stuff they're doing, guys. I mean, if I go steal a pack of bubble gum out of the grocery store in California on my third strike offense, allegedly, you know what I'm saying? I don't live in California, but there was a guy who stole a pack of batteries and ended up doing 25 years because of his third strike. Now, if we see these financial institutions stealing millions of dollars from the people who pay their taxes, guys, we don't have offshore accounts. We don't have, money laundering schemes going on. We're trying to do what's right, in my opinion, which is, for one, I always talk about Toys R Us on this channel. Why did they short Toys R Us to oblivion and bankrupt the company? You know why? Because once you short ladder attack a company and collude with other people and other hedge funds, allegedly, and basically short a stock to zero, you don't have to pay any taxes on that. Why? Because you short sold it to oblivion and there's nothing to pay. That's it. You're done. You're out. So with that said, moving forward here, guys, the Fed is interesting to watch. And we have to keep watching these players, guys, because I think eventually double agents eventually have to turn side And again, I want to talk about the other hedge funds. There's Renaissance. They just went long on the stock, guys, AMC. Very important note. There's like about 800 hedge funds out there, and there's about 24 short on these two plays here. Very important to watch. They can turn on each other. They can, and this is another thing I wanted to address. The share lending, guys. Where the hell did you think the share lending was coming from? Did you really think, you know, each retail investor, individual retail investor with the 500 million shares of the float, 80% of the float here, which I'm sure by now is a lot higher, maybe 100, 120%, maybe 150. Who knows? At this rate, with the naked shorting, the illegal offshore accounts, we got a Brazilian AMC, guys, the Brazilian AMC with this, which is my theory on this, which is the 1/6 theory, is their retail investors may or may not be investors that only invest at a 1/6 rate. Who knows? I don't know. But at the point that the stock is $5.67 per share, over here we're paying close to $33, $34 per share. So with that said, that's exactly 1/6 of the shares, which is also 1/6 of the total billion. Was it 8 billion? I don't know the exact numbers, but it's 1/6 of it. So if you get that, you know math, 1/6 fractions. Anyways, moving forward. So with that said, guys, the next player I want to focus on is the retail investor. Now, the SEC and the Fed, they love the retail investors. Why? They're younger, less patient, more impatient, and they make a lot more mistakes, or they're not as cautious or as calculated as these other entities that have been in the market for years. Also, they pay their taxes. I think I already said that. So that's an important factor I want to keep watching, guys, which will lead me to my next video, which is the MOAS prediction date. I have 2 dates for you guys, and I think with the DD I've done on this, pretty solid. So let's move forward. Again, let's talk about what's next here, which will be the other player here, the AI super Terminator bot, guys, that was created by the hedge funds that basically used a bunch of accountants, brilliant people, by the way, who go in there and they crunch numbers all day. And what they found is how to read the fear and greed index on the stock market using the charts, using all the information that they have based on the past and future or present movements. Now, they know that if they can show you the price go up and crash down and up in volatility, there's less chance of diamond hands. There's more paper hands in those situations. So they continue to show you guys the volatility and max pain theory, guys. If you look at the times in the movements of the stocks, the investments by R2 was an interesting video where they showed that a E-Trader, person on E-Trade, was trying to buy stocks at the time of 3:56 p.m. Eastern and 3:57 p.m. Eastern, was not able to buy on the NYSE due to the fact that there were no more shares to buy. Very interesting. Thought I should bring that up. There's just a lot of developments going on. I think we all know, we've all seen the illegal practices here, and I want the SEC to focus in on these illegal practices. I don't know why they're asking for retail's help, or they're asking for help in general for if you see any unusual activity. I thought that was very weird, guys. Dude. Anyway, so moving forward with the double agents, guys. Besides the double super hedge fund bot, we got the payment for order flow, we got the dark pool activities, we got the market makers. We've got it on all sides, guys. Now, this is my theory, guys. At some point in this movie, they're going to have to freaking reveal. Everyone's going to have to reveal their hands. If you're going to continue to let these companies naked short, use illegal activities, barely even fine them for even doing it, and continue it and turn your head and say, it'll probably take us 4 years to even get in. Well, get the damn investigation started. We could have been 1 year into this by now. But you want to wait? We'll start now. We'll wait. I'm here. We're not going anywhere. Diamond hands, baby. Diamond hands. So, with that said, guys, I want to close this video out. I don't want to make it too long. But we need to focus on these double agents. We need to see who's who. Who can we trust out here? And I'm telling you, the vulture culture that's going to ensue, man, it's going to be nasty. It's already nasty. And I just think we live in a digital world. I think we live in a world where we shouldn't have T plus 35. They give them 35 days to go locate shares. What is that about? You get T plus 2. And not only that, you don't even have to find the shares, guys. You can find shares of equal or lesser value, or not equal or lesser, but equal value as collateral to maintain a short position. And with these over leveraged accounts that these guys have, I mean, come on. There's another important date, guys, September 20th coming up. If you know like I know, it's going to have a similar effect on the market as it did this past week. So just keep that in mind. September 20th the date. And as you know, the last meeting went stalemate. It's more likely by next year we'll increase the debt ceiling. More likely not. I don't know. But point being, guys, we have to keep an eye on these things. We have to stay informed. We have to do our own DD. Believe half of what you see, none of what you hear. And when on that note, guys, stay tuned. But watch out for those double agents, guys. Because to close, in conclusion, I think the SEC wants to keep retail around. If you didn't get that on the gist of the video, I think the Fed, I think the fact that retail has to pay or is more inclined to pay taxes than any other entity or super hedge fund with these manipulative tactics that they have to, hodl the wealth into their positions and naked short a company more than 100% of its worth. I mean, I'm sick of it, guys. But there needs to be some changes, and whether or not those changes will occur will show us who the double agents are, sir. So stay tuned for these videos, man. We're going to keep connecting dots. I told you guys, we're going to keep showing you guys the information. We're going to bring it to you in a very palatable way, and that's what we do on this channel, guys. So stay tuned, stay up, and just stay out there, man, and keep your antennas up, because Mr. Gensler needs a lot of help by his own words on his account. They are cracking down, guys. Maintain your patience. 7 months, 8 months is not a long time in reality when you're thinking about the greatest wealth transfer in the history of mankind. So, hey, I'm here. Like I said, I filled out my beneficiary. Let's go, guys. Let's go.